I told you guys YieldMax was nowhere near done with their weekly dividend ETFs. It's made them far too much money and grown far too much in popularity. We have xdte, the YieldMax S&P 500 Zero DTE Covered Call Strategy ETF. This one looking a little more similar to the Roundhill ETFs. This is not like YMAG or YMAX. Note, remember that. We don't have any distributions yet, but I wanted to point it out to you guys. A bunch of you guys commented about this one, and I appreciate it so much. I will be putting it in the weekly dividend account. But what's this video on? Today we are doing $10,000 invested into the highest yielding weekly dividend ETF. Now that the announcement is over, LFGY is the weekly ETF we are talking about today. This thing has been doing extremely well. It has the highest yield out of all the YieldMax and Roundhill ETFs that I've seen so far, and it has a better return than the Defiance ETFs, which is really important. So we're going to cover a few things with this fund today. There are some cons that I want you guys to know so that if you are thinking of investing, you have the full picture, and then we're going to go into our two calculations, our best case scenario and our worst case scenario on the returns from ticker LFGY. With that 10K invested, it's going to be insane. I promise you, it's going to be crazy. This one might be the best fund. And now we have to give it a little bit more time. But from what I'm seeing, these distributions are insane. Speaking of, if you like weekly dividend ETFs, if you like making money in the stock market, especially with dividends and distributions, you are in the right place. Don't forget to like the video and subscribe. I think like 90% of you guys aren't subscribed, and that's okay because you watch the content and I really appreciate that. But if you're interested in seeing more, don't be shy. Click that subscribe button. So we'll jump right into it. Let's roll that intro. LFGY. They say it has a near 66% distribution rate. We're going to put that to the test with just the first couple of distributions. If you haven't seen it, we have our update on the full weekly dividend ETF account that I'll link at the end of this video. Wait till the end because I want you guys to know how crazy LFGY is. But at the end of this video, we've seen distributions from this thing. We've seen 11 already paid out, which is really insane. So we're going to read some of the boilerplate language that we see with a lot of the YieldMax funds. Actively manage, seeks current income and capital appreciation via direct investments in the select portfolio of crypto industry and tech companies. Now, some of the pros and cons. First of all, crypto is always going to be volatile. In my opinion, it might be volatile up, it might be volatile down, but I think it will always be volatile. There's a lot that goes into that, partially because it's traded around the clock. There is no closing time. So there's no time where it just slows down. It's always going to be volatile. And so that's good. If you're looking for gaining money just off of those covered calls, it's not a bad thing. You know, that implied volatility is going to be up, but they are going to pay out on a weekly basis like we've seen. We've seen all three of them so far. And then there's a lot more of the same language. The performance, nothing yet. We've only seen 3 distributions. I'm going to pull this up in Seeking Alpha, and we'll run all of our calculations there. But let's check more into this. LFGY is an actively managed ETF that seeks current income and capital appreciation via direct investments in a select portfolio of 15 to 30 crypto companies. We will look at those. I am very familiar with these, and it's really important, in my opinion, guys, if you're interested in this fund, to know what's in it. If you wouldn't buy any of the underlying crypto companies, it is a different style of strategy than to just invest in them. But still, it's something you should look into because if you wouldn't buy those companies, it might not be the fund for you. Now, I did talk about some cons. And what is a con when it comes to these ETFs? Well, capital appreciation. It says that they are seeking capital appreciation, but as we know, with a lot of the weekly dividend ETFs, it's not the case. A lot of them fall. The NAV depreciates very slowly in some, very quickly in others, cough, Defiance funds. But these are not funds that you're going to just hold and watch go 500% up over a 20, 30-year period. In my opinion, this is not financial advice. That's what I'm estimating. At best, if they can return just sideways and you can get your initial investment out when you're ready after pulling all those dividends out, phenomenal. But there are still some cons, and I don't want to mislead you guys and make you think, oh, these are perfect, when there are things that I worry about too. I also worry about how much money's flowing into these and how that's affecting the NAV. If that's counteracting, you know, some of the drop that we would see, and if that slows down, if the market really takes a hit, are these going to shrink up quicker than other, you know, normal, just common stock? And that I don't know. But I want to know what you guys think. In a bear market, are we worse off for these? Because we have seen some weird markets lately. We've seen some crazy ups, some crazy downs. If we see crazy sideways, I think that these would do really well because you're getting the distributions over and over again. And so what? If your price is going down a little bit, but you're getting good income, there you go. These are income funds. These are not growth funds. Little plug here. If you are interested in a growth fund or growth stocks overall, check out my other little channel. I'll put it in the description down below. I just made it. It's got under 100 subscribers, and I do just mostly just normal stocks on there and dividend stocks as well, but slower, lower yielding. This is my income channel, which I've been loving lately, and LFGY has been really, really pushing that income with how much money it's been making. So we can see gross expense ratio 0.99%. Not bad. The returns are insane. The dividends are insane. You have to pay for it. That's just the way it goes. It's a lot of work to run these funds. We have a NAV of 50 million. Net assets, 62 million, and a NAV of 50 million. So shares outstanding, there's a lot. Closing price, a lot of data on here you can check into yourself. And then let's go into their holdings. So we have Coinbase and MicroStrategy right off the bat at both around 15%. Two very solid holds, but two very, very, very overpurchased stocks. Coinbase is up near all-time highs. We all know MicroStrategy is up near all-time highs. I'm not saying that it's not going to keep going up. I'm just saying that, think about it. If these are up 200, 300, 400% in the recent future, are they going to do that again? I don't know. I really don't know. And we don't necessarily want them to for this fund. So that's the thing. If they trade sideways like I like, then we're fine. We just don't want them to tank. Then we have things like CleanSpark. We have the Bitcoin Trust ETF. We have Mara. We have Riot. Two very popular. I traded those so long ago. It's crazy looking back on when I used to buy and sell those. We have Core Scientific. We have HUT. I traded HUT as well. New holdings, and then a couple others that I don't really know. But I know most of them, and I know the core positions, which I think is really important. If you're not familiar with them, check them out. Let me know what you guys think. If you like them, if you don't like them, I'm curious as to what the common investor, I'm a common investor as well. I'm not trying to say that I'm not, but what we all as common investors think about these, because sometimes I might be wrong. But anyways, all that thrown into it, let's check out the dividend history for LFGY and really see the pros when we throw this into a drip calculator, because it's already been performing really, really well. LFGY on Seeking Alpha. I really do like that it's crypto and tech. If you're really into explosive industries, if you're into what's going to be the next huge thing, crypto, tech, maybe AI are some of your best options. And they do have another AI fund that just came out as well. We can see that they have an annual payout. It's been $2 so far. So we're going to run some math. And I hope you guys are ready, because I'm going to move a little bit quickly, but I know you guys can keep up, because it's really simple, honestly. We're going to take $2. We're going to divide it by 3. We're going to multiply this by 52, because that's an average, that $2 divided by 3, which is 66.7 cents. And then we're going to multiply that by the 52 weeks in a year, and our payout per year is $34.66. Now, that amount, we're going to take that to get our actual dividend, our actual distribution. We're going to divide that by the current share price of 48.02. Now, this is one factor we don't really know, because this thing might go up in price. It might go down in price. We multiply that by 100. We get a 72.2% distribution rate, which is absolutely nuts. That is crazy. And that's why a lot of people are flocking to this payer, because it's insane what it's been doing so far. Only 3 dividends, but they've all been pretty close together. It's not like you had one huge one and the other 2 diluted it. They've all been very, very solid. And if it can keep that up, man, everyone's going to want to get in on this weekly payer. But when we look at the drip calculator, you'll see some of the cons of these. And the drip calculator is not as useful because it's only been a couple of weeks of trading, so it doesn't really show it. But we're going to jump into it. We're going to see all the dividends that I've paid out and show some of the risks with getting into these a little bit too early. I hope you guys enjoy, but first, a word from our sponsor. Surprise, our sponsor is me. I just wanted to come on here, and I'm going to start talking about some of my favorite books. If you guys don't like this, skip this. If you guys have never read Rich Dad Poor Dad, I really, really recommend it. As someone that comes from kind of a middle-class background, the things that he teaches are really, really cool. It's more so about the rules of the industry and how you don't have to be super educated, or to be honest, you don't have to be super smart to be wealthy and to be very successful. And so I really do like this one. There's going to be a link down below if you're interested in purchasing this book. It's cheap. It's on sale right now. It's $7. Gives me a little bit of a commission. I need money to buy more of these weekly dividend ETFs in our account. My fiance is not going to let me buy anymore, and she does watch my videos, so I have to be very careful what I say on here. So if you guys are interested, let me know in the comments. Let me know if you've read this book. It is one of my personal favorites, and I don't even have a copy right now because I gave it out. I've given it out so many times, and so I might have to order one myself. But let me know what you think. Let's get back into the video. I debated not even including this because it's only been trading for under a month. So the DRIP calculator, it does show it being negative by 2.55% with dividends reinvested and 2.4% with dividends not reinvested, because all it's done is dropped. It was up at one point almost to $700 positive, which would have been great, but then it just fell off. This was a terrible time to get into the market. You guys have seen what's been going on. I hope maybe it's just my portfolio. I really hope it's not just my portfolio that's been, rocky lately. But the DRIP calculator is a very useful tool for longevity purposes. But when we've seen stuff just be rocky, it kind of just shows you. The beauty of this is without dividends, you would be worse off, definitely. Reinvesting didn't help in this case, but you still get those dividends, which is nice. So we're going to jump into our calculations now, which I think is going to be really, really key. I'm going to try and get an estimate on what LFGY will do. No promises, but let me know if you guys are buying into this in the comments down below. I'm really, really excited for this new weekly paying dividend ETF. Dividend calculator, we are going to use this to show what we would make with 10K invested in LFGY. Two calculations, worst case scenario, best case scenario from the data that we have. Now, this is the worst case scenario with a 32.5% distribution rate, which is still absolutely insane, but I factored in some price depreciation over time. So this is cutting the distributions by half because we're losing our NAV over time. This is all speculation because we haven't seen this happen yet. Now, we have DRIP on, of course. We have 208 shares at a share price of $48. We've zeroed out everything else, and we're just going to increase the number of years with this DRIP on. And again, the weeklies go insane with this formula because you're compounding so often. It's amazing. Now, what you might be thinking is, well, 32%, that's too high, that's too low. Some of you are thinking that regardless. So there's some of you that are saying go lower, some are saying go higher. I'm going to kind of round it off in the middle with just half of what the last distribution was. And so the best case scenario is going to be that 72%, which is more than double because that's the average that we've seen from only our 3 distributions. So we can see it gets pretty crazy pretty quickly. When you have a starting balance of 10K, you end with $13,826 after the first year. So you're already making $3,000 a year in dividends off your 10K, which is remarkable. And now, because of compounding and DRIP, your average annual dividend income is going to be $5,290, which is just insane. So that is with our $3,000 dividends from the first year compounded over the next year. That's what it's anticipated to get, which is absolutely wild. Again, this is all very assumptive because we don't know what this fund's going to do. We've only had a couple of distributions and only a couple of weeks on the market, but it's still fun. If you're like, oh, this doesn't make any sense, just have some fun. All right, let's have some fun. Let's see what this thing can really do. Now we're going to start jumping up the years. We're going to go from 1 year to 5 years. So after 5 years, wow, an insane 400% return, 50K as your final ending balance, and you have a total dividend payments of $34,000 over that 5 years. And now your annual dividend income is almost $20,000. You're at $19,300, which is remarkable. That's a lot. It takes a lot for someone to make that much money every single year. Think about making $19,000, and this way you're getting it in 5 years from just 10K invested. Now bumping up to 10 years, it's just insane. And it's only going to get crazier when we put it in the best case scenario. We can see $208,000 in dividend payments over the first 10 years. Your 10K is now worth $255,000, and your total return is 2,400%. Absolutely insane. And again, it's only going to get crazier and crazier. This is the power of weekly dividends, though, and the power of compounding. Now, 10K over 20 years at a recurring return of 32.5% gets you $6.5 million. You've been paid out $5.5 million over those 20 years and a total return of 65,000%, which isn't unheard of. It's going to be tough. I'm not saying it's going to do it. I'm not saying it's not going to do it. I'm just showing you how crazy the distributions have been for this fund so far. Your annual dividend income is now $2.5 million, which is crazy. So we're going to bump this up. We're going to go 30 years. And I like to do 30 years because I like to give the scenario that you're a 25-year-old, you're looking to retire at 55, and you put 10K into a fund. It trades the same, it trades sideways, and you get your 32% dividend over a 30-year period. How much money are you going to be able to pull out every year now? And that number is absolutely insane. Over 30 years, your 10K invested is now worth $166 million, which is wild. You've gotten $141 million from just dividends over those 30 years. And moving forward, your dividend income is now $64 million every single year. So you could retire. I mean, that's a pretty nice house if you're getting $64 million every single year. Absolutely insane. That was, again, the more conservative estimate. I cut the dividend by half, guys. Like, if I cut it by any more, like, what's the point? I don't know. This is the numbers that we've gotten so far. So don't come for me in the comments. Let me know what you think. But be nice. Be nice to me, guys. I like to think I'm a nice guy. Let's jump into our next calculation with our best case scenario, and I just know it's going to be absolutely insane. So factoring in those distributions, 72%. This is with no NAV erosion, which is unlikely. We probably will see some drop in price or at least some crazy fluctuations. But again, best case scenario. With our 10K invested after just 1 year, ending balance is $20,000. You get $7,200 in dividends over that first year. Now, I know you're probably thinking, well, how did we get all the way to 20K when 10K plus 7 would be 17K? Drip. Drip is on. So every week you're compounding, and I can't stress this enough. It's insane what compounding weekly can do. I used to get comments all the time. Compounding weekly makes no difference than compounding monthly. You still get the same amount paid out, which is, it's not true. It's not. If you get 4 payments at every single week, the first week, this payment is now reinvested. So the second week, you have your initial investment plus the first week. That's the difference, and so on and so forth. So yes, it might make sense to think, oh, you're just getting the dividend cut into 4 paid out, but you're not with drip. Without drip, yes, it's the same. I've had to argue that in the comments like 100 times, and if I'm wrong, correct me again, and maybe I'll try and argue it again. But I'm pretty sure at this point. But absolutely insane. So that's how you get all the way up to 20K. So we're gonna move a little bit faster through this because it's just crazy. 5 years, your 10K becomes $360,000. You've made $240,000 in dividends over that 5-year period, and now your annual dividend income is almost $373,000. So yeah, you're like a CEO after 5 years with 10K invested, and with 10K invested, yeah, we're already into the millions. Almost 13 million, actually. You've gotten almost 9 million in dividends over those 10 years, and now you're getting 13 million every single year. Wouldn't it be nice? Like the nepotism kids, isn't it just insane to just have that much money? Like, what if your dad was like, here's 500K? First of all, I'd lose most of it in the stock market. I had some crazy, crazy purchases in my beginning investor journey, as I'm sure we all have. I would have made some money as well and then got taxed on it like crazy because I had no idea how to deal with the taxes. I still barely know. Thank goodness my dad's an accountant. But it will be nice. 20 years invested with 10K starting balance, and now we're into, the billions. So after 20 years, $16 billion. Nice little bit of change there. You could buy a very nice car, a very nice house. You could probably buy an island and maybe even a planet. I don't know who you'd buy it from, but you could probably buy it from somebody. All right, 30 years, same scenario. You're 20, you want to retire at 55, 10K invested over 30 years. We've passed the trillions and we're into what? Quintillions? I never know. So again, that's why it's unrealistic. These things are not going to get you $20 quintillion and $21 trillion annually dividend income wise. But it's fun to run the numbers. It's fun to show how crazy they have been performing. And I do think this thing has potential to do really, really well. Maybe not quintillions well, but hey, who knows? Stranger things have happened. So I really hope you guys enjoyed. If you like this video, don't forget to check out our weekly dividend ETF account update, as well as our $100 every single week from YieldMax that are popping up on your screen right now.